following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from OptionPit.com, Mike Tusaw from KnowYourOptionsInc.com, and John Grigas from Options Express.
Welcome back to the Option Block, and Happy New Year to all of our listeners. I hope it's starting out strong for you. It certainly started out strong for the market. But before we even get into that, let's introduce today's cast of characters. Starting off, we'll mix it up a little bit today. We'll start off with Mr. McRib himself, Mark Sebastian. How you doing today, Mark? Happy New Year to you.
Happy New Year to you. How are you doing?
I'm doing good. Do you have any big New Year's Eve blowout plans? You have a little guy too, so it kind of tempers the New Year's Eve craziness.
Yeah, well, we baby dumped on my parents, and then we went to a friend's house that lives kind of near where my parents live, and had dinner and had a couple glasses of wine, and we went a little crazy. We a karaoke game. So.
We did something similar, but my wife wanted to do a dancing game instead. That's fine. I figured your big crazy blowout would be swing by McDonald's for like the tail end of the McRib and just load up, have like 10.
No, I poured out a little barbecue sauce for the McRib on the 31st and moved on.
You've had your fill for today. If you want any more, you have to go to Germany. I hear it's a regular menu item in Germany.
Is that right?
Yeah. There's some reason it's huge in Germany. So, yeah, all that faux exclusivity they tell us about. The Germans get all the McRibs they want.
All the McRibs and Hasselhoffs they can handle.
Ah, there we go. That's probably why. Mm-hmm. They need the McRib to wash down the Hoff.
Ever since that video of the Hoff eating a hamburger, they can't.
they can't stock them fast enough.
Nobody eats hamburgers anymore. They only want the McRib because if a burger can embarrass Hasselhoff, then
that's it. I never thought of it that way. You've opened my eyes to a whole new way of thinking about Germany's McRib love. Uncle Mike, how are you doing? How was the New Year's at the Tusaw household?
Oh, it was very fun. We got to just relax a little bit, and it's kind of. I remember Mr. Grigas saying last week how he feels like he can relax again now that he's back at work. And my wife actually had strep throat, so I was actually with the kids a lot over the weekend. And I have to say, the markets are much more relaxing than a 1 and a 3-year-old.
That's pretty much true. And Mr. Navabi, or T-Nav, as Mr. Sebastian loves to call you, how was your New Year's?
That was very good. Thank you very much for asking. I'm very excited for 2011. I think 2010 was a good year to me anyways. So, had a great New Year's. And yourself?
How could it be a bad year for you? You came on the Option Block. What's bigger than that?
Exactly. No, I said 2010 was a great year. Was a good year for me. So, I'm looking forward to 2011.
You got to meet me, Tusaw, and Sebastian. I thought that was what else? You can die now. You're done.
Of the year.
That's your bucket list 1, 2, 3 right there.
Well, he's known me since before 2010, so come on.
That's true. So you're already halfway dead because you already met Tusaw, so you're already partway through your list already.
Yeah.
Yeah, we had a good one. We with the little guy, it's kind of hard to rampage at all the late night stuff in the city anymore, but this still was fun, and we did a bunch of stuff with him. And he likes to make stuff, so we made pizzas and nachos, all kinds of crazy stuff. Just as a quick aside, Tusaw, you have 2 kids. Have you ever seen this freaking show, Yo Gabba Gabba?
Have not seen Yo Gabba Gabba as of yet.
Oh, you're a lucky man. My little guy just discovered it. Now he's like, Gabbos, Daddy, Gabbos. And it is the worst freaking thing. It's like 2 guys came straight from an acid trip and made a kid show. And it isn't. If you ever get a chance, check it out. I urge you not to, but that's my own personal hell we're living through right now is Yo Gabba Gabba. And so with that, we will roll right into the trading block.
The Trading Block.
All right, and welcome to the Trading Block. This is the segment of the show where we discuss some of the interesting trends going on in the marketplace right now. And like we said before, the market was kind of in a holding pattern most of the day today. It was up, it was down, it was back up. We closed the day, S&P down about 1.5 handles, Dow up about 20, NASDAQ down about 10, and the VIX down 0.26 points. So a relatively unchanged day, though I know the Russell had a little bit more sizable move today than the other indices, which is not surprising given the small cap nature of it.
Russell's down $12 today. That's the crazy thing. You know, people look at the Russell and they think, oh, you know, it's kind of lower priced. It's all electronic. You know, it's got a nice premium, so I'm going to trade that. You know what? The Russell is really hard to be successful at, because unless you sit there and watch it all day, that sucker flies, okay? There's a reason why the RVX is 8 points higher than the VIX and 7 points higher than the VXN. That thing moves around and has moved around. It's expensive for a reason. That has bucked off. Any premium sellers in the Russell have basically been bucked off over the last couple of months.
I've always stayed clear of it, partly for that reason. It's because, that's kind of the nature of the beast with small cap stocks. Is one of these little names, anything happens in them and they're off to the races, and there goes the Russell. And you really got to know your game and know your Russell components if you're going to do it, especially premium writing out there. Like I said, you can get whipsawed pretty easy in the Russell.
Oh, yeah, and for some reason that seems to be like the go-to index for new traders, and it should be the last one that they get into. For newer traders, I always push them toward like the OEX or the SPX. Yes, you know what, that open outcry component can make it a little more difficult to get execution. But, those two products – in those two products, I've definitely had some of my toughest time getting executed, but I've also had my best execution. The Russell, you're always going to get mediocre execution, but who cares about mediocre execution when you're trading a product that's really hard to trade? You know, I'd rather have below average execution in a product that's easier to trade than the other way around. That said, if you can get good at execution, you can have it both ways. You can get great execution and a nice product by trading something like the OEX or the SPX regularly. And
it's probably easier for new traders to wrap their heads around a little bit too. They understand the S&P a little bit more. If you understand the top 50 or so stocks in the S&P, you understand where the bulk of that index is moving on any given day. Even the top 10 to a great extent accounts for the bulk of that move. Of course, that's mostly Apple these days.
It's Apple and Microsoft and XOM and a couple other ones.
Then, of course, we had the Fed coming out today with their Federal Reserve minutes, and that seemed to put a little bit of the damper on some of the enthusiasm in the market early today. People were not exactly enthused by that information coming out of the Fed, and it also seems a lot of people are playing the old waiting game now with the Fed, where they just want to wait and see, and nothing from the Fed minutes today really seemed enough to move the market substantially, but it was enough to kind of put a brakes a little bit on some of the rally. Of course, we opened the year off strong on Monday, so we needed a little bit of a sell-off. Stymieing the rally a little bit further was a spate of downgrades coming out today. We saw UBS downgrading a bunch of construction firms today. On the other side, Morgan Stanley downgraded quite a few grocery chains, and those are two sectors that are very macroeconomic influenced, you could say. The construction trade, obviously, with housing starts and housing numbers are very dramatically influenced by those, and the grocery chain, obviously, people aren't spending and the economy is slowing down, then people aren't spending in grocery chains. So both of those sectors took a hit, and that seemed to put a brake on the market today, too. What were you guys watching today?
Today, one thing that you're right. On the macro level, it was kind of a dull day. I think that Monday was just kind of a day of euphoria. Happy New Year. Let's buy some stock. I'm curious to see tomorrow, now that we'll actually have and we can talk a little bit more about this in the Around the Block segment, but I'm curious to see what's going to happen once we actually get some announcements out, some things that could possibly move the market. I think that in terms of your favorite stock to argue, your and Mark's favorite stock to argue with me about, Apple, it had kind of a euphoric day on Monday in that it went up quite a bit, and then today it pulled back a little bit initially in kind of an up and down market, but nonetheless, Apple still finished ahead. I have it still ahead on the day by close to 0.5%. And I think that technology going into the big show that you like to refer to all the time, Mark, especially with Apple and also with earnings coming out, I think that just what we're looking at or what's been interesting to watch is what's going on in that sector right now, especially with Apple.
Yeah, there is a lot to talk about with Apple these days, and I know you're probably pretty excited on that vertical you had going up there. I think it was a 320, 330.
Yeah, it was a vertical debit spread that we had on for a couple people, and it's going well. I mean, it doesn't always work out too well, but it's one of the ones to where it's what I always refer to as a good problem to have, and that it went up too quick. So we're thinking it would probably go up a little bit more gradual than that going into earnings, but nonetheless, we're still in it, and we're just going to hopefully it's kind of like a debit spread turning into a credit spread, and that now it doesn't necessarily have to go up, but now you just look at it and hope and pray that it doesn't go down.
Exactly. And Mr. Nababi there, what have you been seeing in the old commodity sector today?
A lot of red.
You mean these things can sell off? Gold and silver can sell off? Where's that coming from?
It's funny how, you sort of started out with the introduction that, the market was kind of flat today or, nothing very exciting, where there was a lot of excitement in commodities today. Basically, everyone got flattened. We're talking, silver was down over 4%. Gold was down about 3%. Crude oil, that was down over 2%. Some of the grains, those were down. Wheat. And it's kind of a mixed bag in the commodities on why these were down so much. There is some good news on some of them, and then on the other ones, it's just a pure liquidation, from the rally that has been 2010. Basically a lot of big money, they were around today, and they thought that this was the day to take some profits.
With the commodities, there was an old war documentary series, I don't even know if it's still around now or not, called Why We Fight. And I think that days like today make me want to just put up a webinar calling it Why We Hedge.
Right.
Yeah, that's interesting because, you talk about the market giveth and the market taketh away. Your Apple call spread is doing quite well. And on the flip side, your all year long metals positions took a sizable hit today. So that's a good time to be collared. And a good time for the downside protection that you always are so fond of emphasizing, Mr. T.
Yeah, yes. So it's like you're a very boring guy at the party when you talk about hedging, but on days like today in the metals, you magically don't seem so boring anymore.
Yeah, it's like you're the insurance salesman showing up at the party all the time. You really should buy some of that downside protection, sir.
There.
All right, and with that, we'll close out the old trading block and roll right into the odd block.
The odd block.
And we'll start off today's odd block with a little name, but that's kind of what makes the odd block fun. It's one I'm not particularly familiar with. Genco Shipping and Traded Limited, GNK. And they're trading around $14.76 right now, up about 23 cents. And GNK, this is one they saw today. They doing about 5 times their average daily volume today, with a lot of people coming in and just gobbling up these Feb 14s. This thing's done over 15,000 contracts today already, so they do about 3,000 a day normally. So this is size volume for this name. The bulk of this activity, almost 14,000 of the contracts, has been in these Feb 14 strike, where people are gobbling up for about an average about $1.25. And we've seen, not surprisingly, a vol spike of about 5.5% on this strike. This is a strike that had an open interest of 167 contracts. So this is all new paper flooding in.
Pure stock play. It's a pure stock play, and I'll tell you why. You know what the stock volume is today? About 1.6 million. This guy just bought the equivalent of about 1.4 million shares by buying 14,000 of those. So he basically was able to find better liquidity buying the options than he was buying the stock. So that's my guess as to why he was doing something like that. Pretty bullish play here.
It seems like it. It seems like it because these ones expire before earnings, so it's not exactly like an earnings play. So it's not the typical play you'd see for someone who's looking for a pure options play, especially with this kind of size. It did seem to have a bit of a stock surrogate air to it. Surprising you can get so many off without moving it that badly. That just shows you how deep some of these options markets are in compared to the equities.
It's unbelievable. It is unbelievable. But
just as an overall trend, this is the name Genco. They had a bad year last year. They're down about 40%. They had a 52-week low on December 29th of $13.88. So this guy obviously bullish, obviously wants to pick up more stock or more deltas anyway, and he thinks this is a good time to be doing it. If that 52-week low is just the bouncing off point, he could be right.
Mm-hmm.
An interesting one to watch. They reminded me actually a lot, and that's why I threw them into the mix today as well, of one we talked about a few weeks ago, which was Radian. That was kind of another one.
Oh, yeah.
Small name. We saw about 15,000. Maybe it's the same guy for all we know. That's his number, 15,000. But he came in and bought about 15,000 of the Jan 9s a few weeks ago for about 35 cents.
I remember that.
Yeah, and Radian today is trading about $8.61, so about unchanged on the day.
And those calls are still worth about the same, too. So. Yeah,
well, we've actually been watching. We actually legged into a few of them after that big trade went up. We were watching it. We legged into them. I think they went up for about between 35 and 40 cents, the bulk of them. We got them for around 25 cents, I think. They came off quite a bit, actually. They came off down to they're trading around a dime for a while there. And we were looking to leg into a 7.5, 9 risk reversal in January. You actually almost could do it for even money. The stock got close to around the 7.5 level, and we were looking to doing it, and then the stock just shot off the other way. So we ended up legging out of those Jan 9s for a bit of a win. But
nice.
it was one of the few chances we had to scratch these things. But we like sometimes playing around some of these names that we track a lot on the site. Funny thing enough is, after we mentioned on the show, Radian didn't exactly settle gently into obscurity again. They've been doing a decent amount of volume since then. They've averaged about 4,000 contracts a day. And yesterday we saw a lot of players coming in again to the Jan 9 strike. About 5,000 went up yesterday for prices between around 30 to 35 cents. It looks like it was split roughly even between buyers and sellers, so a lot of people were taking their chance to close out that trade for a break even. A lot of people bought it for 35 cents a couple of weeks ago. So it's like people are taking their chance to get out. We also saw activity yesterday on that on the Feb 9 strike. We saw about 2,000 of those go up. And we talked about this spread before. Most of those Feb 9s were sales. Mm-hmm. People are legging into that Jan Feb 9 call spread for like 20 cents. It's a terrible trade. I don't know why.
Somebody just bought the Radian. Somebody just bought 1,000 of the Radian 11 calls for 20 cents, just as we were talking about it. What do you think about that?
The Feb 11s, you said.
Yeah, 1,000 just trade.
Yeah, that's what I was going to mention. Yesterday was the Jan and Feb 9s, and then today people are rolling up to the 10s. The bulls are coming out again. People are gobbling up the Feb 10s. About 1,000 of those went up today. Actually, almost 2,000 now.
Methinks earnings are in February. That's my bet. The live all has them set for the 22nd of Feb. It's got to be landing in. They're going to land in February.
Well, it's interesting too. Is that it's starting to light up the Jan 10 strike as well. And when I first saw that, I was like, oh, people are probably legging into that 9-10 vertical for a decent price. But they're not. They're buying the Jan 10s now too. So
that's crazy.
For 15 cents, almost 3,000 of those have gone up today. The bulk of those buy.
That's a sale.
That's my opinion, exactly.
I may just leg that call spread. That's not a bad little
exactly.
thing.
That's not a bad little vertical spread. It's an interesting name. We've been watching it a lot, and there's a lot of interesting paper still going up out there in Radian. The bulls are obviously still out in force. People buying those Jan 10s are very bullish. I wouldn't be. I mean, this doesn't look like a stock play here. I mean, not buying the Jan 10s for stock.
No, this is a something's about to happen play.
I mean, this is the name we talked about a few weeks ago, and we talked about how it moves in great bursts. It was up about 60 cents yesterday, so that kind of moved it quite a bit. It's hovering today. Maybe it's poised for another big upside burst. Certainly the people buying these Jan 10s seem to think so.
Yeah, no kidding.
Maybe we were hurried to scratch our Jan 9s for a profit. We should have held on to them. But it just seems like the bulls are still out in force in this one. Except for those people legging into that Jan Feb call spread. They're just crazy as far as I'm concerned.
Yeah, I agree.
And that's going to do it for the old odd block. And with that, we will roll right into the express/spread block.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express/Spread Block. This is the segment of the show where we listen in on what's going on behind the scenes over at Options Express, and we hear some insight into what their customers are looking at, what their customers are trading, some of the pressing inquiries they're receiving on the trading desk there, and some of the other things that are going on in Options Express land. So, Tim, take it away. What is going on in Options Express land today?
On the equity side, if I can just take 2 minutes here and say that, we had a lot of calls on Motorola today. What happened to my Motorola stock? How did I lose?
That's not a surprise.
How did I lose money? So that was one of our most asked questions this morning. I think as we discussed before, they did a reverse stock split, and then they did a spin-off of their mobile instruments. So. That was the news on Motorola this morning. Another one that we've been getting a lot of inquiries on has been ATHR. And maybe we can talk about this a little bit later. I guess they're going to be bought by Qualcomm. But I think there were some rumors that it wasn't going to happen. Just rumors, basically, coming from TV, coming from news, which kind of caused a lot of volatility in the stock. People kind of wanted to know what's going on with it. So that's another one. And then, one of the other more popular equities that people are always talking about are the rare earth. So, MCG and REE. Those are two popular stocks right now. So that's on the equity side. You guys have any comments on any of those, or?
Not surprising that Motorola would be taking up some of your time today. That is a confusing one for even people who watch it on a regular basis. What are they doing? What is this mobility services? What is the other part? That must be an interesting part of your job, is having to verse yourself on these various corporate actions so you can actually explain it to your customers. Sit down and say, okay, they're doing a reverse 7-for-1 split. This company is doing that. This company is doing that. Do you actually get into that level of detail with them?
Absolutely.
Really? Wow, that's impressive for me and kind of scary for you guys. You have to learn all that stuff.
Yeah. Customers will see there is a change in their account in the morning, and they'll pick up the phone and call. That's okay. That's why we're here. At the same time, you can always do a Google search. That's a lot of times how I start some of those calls if I don't know what's going on. So, a lot of these things, corporate actions, they are very transparent. There's a lot of news on them, so they are out there. You can always find news on exactly, what is happening.
So what were the customers, were they getting out of Motorola today, or what kind of trading were they doing around Motorola based on the news? Or they just kind of calling up to familiarize themselves?
Yeah, they just kind of wanted to know what happened. Yesterday they had MOT, today they don't. And that's the question. What happened? How come the values are different? So, there's a lot of hand-holding in going through what happens on a reverse split, what's, going to happen on a option, that was trading before all of this happened compared to, now that's trading after this has happened. That whole option contract is not a standard option anymore. That's, it's a non-standard option. Everything is sort of changed on that. So we get a lot of those questions. That's probably one of our most popular questions is when there is a corporate action and the options are adjusted, people will say, well, what, my option is $10 in the money and it's only trading for $1. Why is that? And it's, well, because that option is not good for 100 shares anymore. It's good for something else.
Well, you guys have some experience with that in your recent history with corporate actions adjusting options.
Yeah.
But yeah, I know for our listeners, the new ticker on Motorola is MMI, and that's a company you want to trade. And the other one, I believe, the other part of the spinoff is just doing emergency radios and a few other things that really aren't what people traditionally consider Motorola to be, and nor are they the most profitable businesses like the Droid and that sort of thing. So if you're looking to trade the Motorola of old minus a few lagging businesses, then MMI is the one you want to look at.
MMI and MSI both started today.
I'm looking at my live vol, and they can't seem to wrap their heads around. Maybe I should be using Extend for this. Extend would obviously do a better job.
That's a very good comment. I mean, that's very interesting you say that, because when I sat down at my desk this morning about 15 minutes to 8, I was on CNBC, Yahoo Finance, MarketWatch, going through these sites, seeing if they have updated quotes for MMI, MOT, what are they showing? And that's because that's where customers will go to look for quotes. So a lot of times they'll say, well, I see it here on this site, but I don't see it on your site. What's going on? So I noticed even this morning there were a couple sites that still weren't updated on the MMI or MSI. But I think just about everything should be updated now that they're trading anyways.
And the other one you mentioned, ATHR, I believe it was.
Mm-hmm.
That's an interesting one. Not one we're really familiar with, and it doesn't come up on our radar very often, as you can imagine. What were your customers coming in and just buying calls or legging into verticals? What were they trading out there?
Buying calls. Trying to buy calls, trying to sell put spreads, any way to get long. But, like I said before, some of the news, was not too clear. So, we had people who, were trying to buy calls, but, they kind of wanted to put in a little bid. They didn't know, how aggressive they should be with these calls, how much risk to take on selling puts. They wanted to know if we knew of anything. And again, not a bad question, but at the same time, what I know pretty much is the same thing as, what's out there. So, a lot of times what I'll do is just, start searching for news on this, and let the customer know exactly, hey, this is what we know.
Yeah, that's almost venturing into trade recommendation territory at that point, which I'm sure you guys don't like to go down that road very often.
No, not at all.
But yeah, just for a quick update there, that's ATHR, it's Atheros Communications. They closed at $44 today, up $7, up nearly 20%. So they had quite a run. I don't see any updated news. Like I said, it could just be rumors floating around out there. It looks like the last big news was from Insider Trading Bureau back on the 26th. Big 20% nearly move in Atheros. Might be one we'll keep an eye on for the odd block going forward. All right, Tim, thanks for that peek behind the curtain of Options Express. And with that, we'll close out the old Express/spread block.
The strategy block.
And welcome to the strategy block. This is the segment of the show where we gather around the campfire after Uncle Mike comes down from the mountains with his latest pearl of wisdom, and we gather around and we eat some s'mores, and maybe we have some fine micro brews of his choice to wash them down, and we listen to his latest bit of options strategery. And Uncle Mike, what do you have on the docket for us today?
Oh boy, we got some serious strategery today, I tell you what. The ratio combination. One of the beautiful things about the option world is that you have the ability to define and customize your risk as well as your potential reward. And I want to get into a way with which you can use ratios as a way to kind of enhance in some ways, and you have the ability to shift risk in ways that you may or may not be aware of. For example, the basic combo trade, COMBO, is when you sell a put and you buy a call simultaneously. What it is, let's say XYZ stock once again, it's the consensus opinion of the option block. It's our all-time favorite stock because it always does whatever we want it to do. XYZ stock is trading at $50 a share. If we sell the 50 put and we simultaneously buy the 50 call, we've created a combo. Now, with that, it's not an extremely exciting position in and of itself because of the fact that it's pretty much the exact same thing as buying the stock. If the stock goes to zero, you're going to lose all your money on the put, and if the stock goes higher, you're going to make all your money on the call. Now, it theoretically won't cost you anything because of the fact that the premium that you collected from the put finances the cost of the call. The reason that someone would consider a basic combo trade is perhaps they have a tax issue of some sort, or maybe they want to get a better margin as opposed to simply owning the stock, and maybe there's a better way of doing it, or they're trying to do some type of a risk reversal. There's several reasons with which people do it, but all in all, it's really not that exciting of a trade. When I guess it could be exciting if you have enough money to make it exciting, but the point is that it's not that much different than just simply owning the stock. What I want to talk about today are ways with which you can set up ratios with the combo itself. So let's say, for example, that once again XYZ stock is at 50. One thing with which you could do is you could sell the 45 put, and with the premium that you collect from the 45 put, let's say you sell one contract, perhaps you can buy two contracts at the 55 level. You can go to different months. You can go to various strike prices. Sometimes it's going to cost you a debit. Sometimes it doesn't. Now, with that, you're probably wondering and thinking, well, wait a second, Mike, when on earth is that not going to cost you a debit? Theoretically, it should every time. The time that it won't cost you a debit is if you have a dividend-paying stock. Now, let's say, for example, that you like the dividend, you like XYZ stock, because right now, because it does what we want to do, we're going to say it now pays a 5% dividend. With that, the values of call options will then become less than put options. So one thing with which you have the ability to do is what's known as a ratio combo. And with a ratio combo, you can sell a put option, maybe a little bit out of the money, maybe the 47.50, maybe the 45, whatever works. After all, it is XYZ stock. And then perhaps you can buy two 55 call options. So with that, the point is that you could then have half of the downside risk, but then twice of the potential upside after it goes up a little bit, minus the dividend. And it won't cost you anything if you set it up. And that it is a doable thing if a stock pays a dividend. Now, what's the disadvantage? Well, the disadvantage is that you're missing out on the first part of the potential rally from 50 to 55. To quote Judge Schmales from Caddyshack, you'll get nothing and like it. But once it gets to the 55 level, you can get twice the potential upside. Now, the other thing, let's say the stock stays the same, well, you don't get the dividend. If the stock goes down a little bit between 50 and 45, you'll have no risk. But then once it goes below 45, you'll have half of the downside risk that you would have as opposed to owning 200 shares of that specific stock. Now, with that, I know I've spouted out a lot of different information, a lot of directions with which you can go on it. But my point is that you have the ability to customize the risk in whatever you see fit. You can set up in a lot of different ways, and it's not about getting rid of risk. It's about customizing risk. It's about defining risk. It's about shifting the risk to whatever way suits you the best for your individual needs, goals, and objectives. And with that, I will conclude the combo ratios for the day, and I'm heading back to the mountains until the next segment.
Well, you didn't disappoint, sir. That was indeed some serious strategery on your part. I guess you probably should just clarify for our more basic listeners that the combo, it is the same strike trade, so you should do it on the same strike. You're buying the call, selling the put, and vice versa. Also, you don't have to do it that way. You can also obviously do a short combo where you're shorting the stock, where you're selling the call and buying the put. So it doesn't have to always be a long strategy, even though I'd imagine the bulk of the retail users for combos use it for that purpose.
Come on now, stocks never go down, do they?
Yeah. It's not one that's done that often. I think possibly also, too, because it's hard to execute. And maybe, Tim, you could speak to this a little bit. It's hard, because combo, you're legging into a stock position, essentially. And if you get a bad execution on that, you're essentially hurting yourself quite a bit on the stock price. So do you see a lot of OX customers coming in and trading combos, Tim, or maybe calling you up and asking about them?
I do. And I'm usually a little surprised sometimes when I get a call of somebody that wants to trade a combo. But, for the most part, I do find that the people who are trading these, they are more of the intermediate level, advanced level trader. And I've never had any problem with execution on these. I can put them right through the system on the website, on Extend. If I need to, what I'll do is, I'll talk to my execution desk. They can work it directly on the floor. So, it is always good to be concerned about execution risk. I mean, always. But yeah, I do see people put these on. I think it's a pretty good trade. I like the idea of the ratio. I never thought of that. I think, it's something I'm going to try out in my virtual account. One of the better benefits of, having an Options Express account is, you can try something like this in a virtual account. And that's what I always tell people to do if they're unsure of a strategy. Just, try it somewhere where there's no real money involved.
That's surprising to me. You see a lot of people coming in to trade combos. Is it mostly for tax purposes? Is it maybe in a liquid equity where they need to use the options to leg into the underlying, or why are they doing combos usually?
Yeah, that's a good question on why they're doing these combos. And I don't know. I'll be honest with you. I really don't know why they're doing this. I think they're just doing it because, they don't want to be purchasing the stock. That's some of the main reason why I think they're doing this. They can get a better margin on this than they can by just buying the stock.
The reason that we like to do the combos is just kind of like I said, you get to customize the risk. If we're in a stock that we like, but maybe we're a little bit concerned with, a stock that maybe we would typically maybe the collar just isn't working out for us on the stock, or maybe it's something to where for whatever it's like the collar's too tight, or we want to have a little bit more upside on it. We have a collar style mentality in that we'll try to take away some of the downside risk. Not all of it, because you got to have some skin in the game somewhere. But when setting it up as kind of a ratio style combo, and it doesn't always work out 1/2. Sometimes it'll be 2/3 or 7/8 or whatever. But you have the ability to kind of shift your risk a little bit. You're taking some risk off the table, and it's just basically a risk shift to where if the stock does go bankrupt, you're not going to go fully bankrupt with it.
That's an interesting perspective on the combo. And so, yeah, we should call this the combo episode because we're just full of combo talk today. Mm-hmm. But that's going to do it for the strategy block. Uncle Mike, you may return now to the mountains until we require you again, and we send the signal up into the clouds, and you come back down for another weekly session of tips, tricks, and whatnot. But,
I need that signal. I don't get Wi-Fi up in the mountains.
Yeah,
so
I imagine it's pretty hard. I think we can tell by some of your dropping in and out today that you're beaming in from the mountains as we speak today. But, yeah, that's going to do it for the strategy block. And with that, we're going to roll right into Around the Block.
If you're interested in becoming a professional options trader but feel a stronger understanding of trading fundamentals is required before pursuing a mentoring course, sign up for Option Pit Mentoring's Level 2 Prep Course. Topics covered will be volatility, the Greeks, position setup, and basic management of income option positions. Classes start on January 24th. Register at optionpit.com/event. For Option Block Insider Radio listeners only, receive a $100 discount when you use the promo code OI2011. That's optionpit.com/event.
Around the Block.
And welcome to Around the Block. This is the segment of the show where we discuss some of the interesting things we see on the horizon, both from a macro and a micro perspective. And Mike hit it on the head with the trading blocks. We might as well dive into it. This is, of course, CES week. We've discussed it a few times on the show now. If you're a technology trader or into tech stocks or into watch the tech sector at all, you should be paying attention this week. The big news has already started trickling out a little bit, but the big stuff will start happening around Wednesday, I believe, is when the press gets their advanced looks at some of the things they're going to be exhibiting. I do believe Verizon has a big announcement scheduled for this week. A lot of talk now that the oft-rumored for years Verizon iPhone.
Oh, and I think that's going to hammer AT&T, too.
Oh, yeah. That's the other side of that is what do you do with Verizon 8? And also I think Motorola, because that's going to hurt the Droid sales. They're the big Verizon right now.
I'm not sure that hurts the Droid sales that as much as you'd think. Because there are people that just love the Droid. I think you're one of them.
Yeah,
but
I'm on the Droid bandwagon.
AT&T, just with this announcement, they lose their ability to carp sales from Verizon. Even if you say AT&T is going to keep every one of its customers that has the iPhone, how do they get new customers? Consumer Reports weighs their network as one of the worst.
Oh, they crushed it, yeah.
Yeah, and why would anybody that has Verizon go to AT&T? And then right about now is when all those first-generation iPhone users are their contracts are rolling off. And if you think that they're not going to go at least sniff out Verizon, I mean, you're crazy.
Oh, you're insane. Yeah, if you go to AT&T now, you know what you're getting, and you deserve what you get.
Yeah, no kidding. Well, truthfully, you may actually see a better service from AT&T as all these people line up to go to Verizon. And this couldn't happen at a worse time for a better time for Verizon and a worse time for AT&T, because the FCC is finally letting them do that a la carte data usage pricing.
Yes.
And they're going to make a killing doing that. And that's just going to be such a boon for Verizon and so unbelievably terrible for AT&T. I mean, what I suggested, I actually wrote this up for The Street. It's going to be nationally published on their homepage. Is I think that you can buy the April 30 puts and sell that are 20 cents in the money. 1 second here. Pull up AT&T. AT&T's trading about $29.80. You can buy the April 30 puts for $1.60 and sell the 28 puts at 70 cents. So you're buying a 90-cent spread that's 20 cents in the money. I really like the probabilities of that trade. That's what I'm really looking for.
Yeah, so that's an interesting one to watch. I imagine, obviously, you're watching Apple quite as well, Mr. T. So anything you want to chime in about with more Apple stuff?
Well, yeah, it's one where this is an exciting time for stocks like Apple when you have big announcements and that type of thing. But one thing that I want to emphasize, yes, there are some clients that we have in call spreads, but I want to emphasize this is all done with a very, 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 very small chunk of portfolios. When we're doing levered trades like this, when you're trading announcements or you're trading excitement into earnings or whatever it is, it can turn on a dime. So it's like Walter Payton, the running back. You can change directions that quickly. So I would emphasize that as you're trading announcements, whether it's earnings, consumer electronics, macroeconomic indicators, if you're doing the indices, whatever the case may be, if you're doing it with aggressive options, it can never be emphasized enough that this needs to be done with a smaller section of your portfolio.
Yeah, I don't think you want to swing for the fences with upside Apple calls with your entire portfolio or anything along that. I'm sure you get a lot of those calls, Tim, where people come in, they want to put their whole portfolio in 10 Delta Apple calls ahead of earnings or something crazy like that.
I've seen that.
That's a very, very common thread we see especially with beginning retail options traders is they can't afford the at-the-money, so they migrate to the out-of-the-money liquidity, and tends not to be the best bang for their buck, and it tends to sour them on the entire market. So this is the week for Motorola. We discussed they'll be moving the bit this week too. Maybe we'll see some new announcements from them out of the Droid and that sort of thing. RIM, a name we like to talk about a lot. We'll probably have some announcements. Netflix, I would imagine, a name we discussed quite a bit that moves quite a bit. They'll probably have some announcements there as well. Streaming video is all the rage these days, and anyone who follows that sector and who's been some of these call buyers and or put sellers on Netflix probably should be paying attention this week. So Cisco as well, I'd imagine. We'll have to wait and see what Cisco does. I know we were driving home with something the other day, and we saw another flip ad on the side of a bus. So they're spending pretty heavily to move those flips. So that's obviously a big play for them going forward. So it'll be interesting to see what they announce there. Maybe it'll be some sort of new flip device or something like that will move the needle. Are you officially in on Cisco now, Mr. T?
Not official, but in a few days we shall be. We should be.
Are you buying the stock, or are you legging into some downside puts, or what are you up to?
It's still not. Jury's still out right now. Still in the analysis stage.
And so, Tim, what are you guys watching over at Options Express for the rest of the week?
We're going to be watching commodities. We're going to be watching the metals. We're going to be watching crude oil, and we'll be watching the grains. Sort of trying to figure out, what happened today. Was this profit taking? Is this a signal for a larger move in the other direction? That's where we're going to be. That's what we'll be watching. Crude oil had a pretty hard sell off just as it got over 90, just as everyone was saying how it was going to be over 100. So we're going to keep that close on our radar. And then the metals. We kind of want to see here, is this is this a correction? How much is this correction is where will we go in this correction, or is this something different?
It's surprising that it would wait until the second trading day of the year to really turn on the commodities. Do you think people would start reallocating on the first? Of course, like you said, a lot of people were out on Monday, so maybe that was part of the reason.
I have an answer for you.
What's that?
2010. Okay. I think. Gold, good year for oil. So you had a lot of, I think, professional traders, money managers out there who, did real well in 2010. I think what they did was take December off, and, as we kind of saw, everything kind of just floated higher, and they came into the office today. They probably figured yesterday they needed, one other day, but today was the day to kill it. Take money off the table. So, I think they just, the big traders, the big money, I just don't think it was around in December. And, they saw this was a great opportunity to take some money off the table.
Mr. T, are you guys adjusting your silver or gold positions as a result of this? Or are you kind of just waiting and maybe wait a little longer, then take the puts off the table and go for the rally, or roll them down, or what are you guys looking at with your collars?
Well, in gold right now, we're still a little bit out of the money with our puts, so we still would have a ways to go before we'd make an adjustment to the downside. On the silver side of it, we're still short, way out of the money puts right now, and if it ever comes back down, we're more than happy to buy it at those levels, and then reinstitute a collar, but. In the meantime, we're just happy to be short the puts.
Well, that's going to do it for the Around the Block segment, and it's also going to do it for this episode of the Option Block. I want to thank you guys for coming on the show. And Mr. T, what is going on over at Know Your Options this week?
Nothing too special. We have our weekly webinar series, so Sunday night, and we will not be having a webinar because I am attending the birthday party of a very beautiful little girl, my daughter. She turns 2 on Sunday. So we aren't doing our Sunday night webinars, but we do have webinars on Monday night. For more information, go to knowyouroptionsinc.com and check it out.
Now, your kid's about the exact same age as my kid. My guy just turned 2 a few weeks ago. So, so we are in the same boat from a crazy child perspective. And of course, our listeners, if they want to know more about you guys, just visit knowyouroptionsinc.com, or maybe they can pick up the phone and call Uncle Mike directly to learn more about how he's structuring those collars to take in some of the downside, particularly in the metals, or maybe, hey, you want someone to help you leg into some verticals in Apple. Well, Uncle Mike is the guy for you drop them a line over at Know Your Options Inc. Do you guys have a main number that you want people to call, or just visit the website?
We do.
Put it out there. Go ahead. Yeah.
866-903-1822. Give us a call.
Yeah.
Operators are standing by now.
If you call in the next 20 minutes, you get your free Franklin Mint figurine of Uncle Mike. And
we'll
it
throw
is a
in a
lovely
free straddle for you.
It is a lovely collector's piece. You want to have it for generations to come. And of course, Mr. Navabi, I should say,
yes,
from Options Express. I want to thank you for coming on as well. And what is going on over at Options Express in the coming weeks? I know you guys have that big Dallas event coming up pretty soon, right?
Yes. I don't have any dates on that exactly, and I don't have any dates right now at the moment, but they are on our site, and they're under our Educate box there, which is also just a great place, I think, to catch up on some of the strategies that we talk about here, learn about some of the markets in addition to that. You can always find events under our Educate tab at optionsexpress.com.
Mr. Sebastian, why don't you tell our listeners what you have going on over at OptionPit.com?
We've got this special class, this new class coming up starting at the end of January. You probably heard a commercial for it. And I'm giving a presentation to the Option Club, that is the Option Club, on the 20th. And then actually in February on the 5th, I believe on the 5th, that's the Saturday, I'm actually going to be in Dallas speaking at an Options Express conference with my brethren at thestreet.com.
And, of course, our listeners, they could find all of that stuff and more at optionsexpress.com. It's on the education tab, like Tim said, and you could find out more about those events. And, of course, if you want to hear more about the unusual activity or any of the other things we discussed on the show today, then surf on over to theoptionsinsider.com or just search for Options Insider Radio in iTunes. You might have to search a couple of times. The search function in iTunes is atrocious, to say the least, but we will come up there if you type that in eventually. And so I want to thank you guys for coming on the show. I want to thank all of you listeners at home for downloading and streaming and subscribing to this show. And we will see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.